Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, the 26th day of July, 2019, and this is the Daily Report for Gold and Silver, our weekend review. This week can be characterized as having a small, dynamic, but narrow trading range as market participants, investors, and traders get ready for the star of this month, which will be the FOMC meeting, kicks off and concludes on July 31st, about 5 days away. While it is highly expected that the Federal Reserve will announce a rate cut, the question is to what extent will that rate cut be? They are favoring, in terms of probability, a rate cut of 0.25% or 25 basis points, with a small percentage of a probability, I believe under 20%, favoring a rate cut of 0.5%. Just as important as the rate cut will be any information that can be gleaned from the statement and subsequent press conference that will be held about a half hour after the conclusion by Chairman Powell as to what the Fed is planning to implement in terms of number of rate hikes. The market is pretty much factoring in 2 rate hikes in this fiscal or calendar year, I should say, but we'll have to see what statements and what words come out of the Fed next week. In the meantime, let's take a look at pricing as of today. Traders, with the exception of gold, the precious metals complex did trade lower on the day. Gold did gain, currently up $3.60. We're looking at the continuous contract, which is based off of the August contract. However, next week, that will get shifted where everyone is looking at the October contract as the most active trading month, $1,418.20. Platinum dropped about 0.6%, $5.20 in terms of decline, and currently at $868.80. Very nominal move in palladium futures, 1531.10. That's down about $2.80. And silver actually ticked up now, up about 0.5 cent at 1641.5, and that market has been moving quite briskly. All of these moves in the face of some mild headwinds by a stronger U.S. dollar. Traders, let's take a look at our technical studies. So if we had to characterize the trading range and activity in gold over this last week and only use one word, we would have to say quiet. The market is awaiting what news, what announcements are made by the Federal Reserve at next week's FOMC meeting. They have largely factored in a small rate hike with a smaller probability, about a 20% probability of 0.5%. The key right now is the tightrope that the Federal Reserve is going to have to walk next week, because the dovish statements that came out earlier this month have to be tapered with recent economic data suggesting that the economy has picked up from the numbers they were looking at then. The GDP numbers that came out today are signaling that we had solid growth. Earnings report has taken the Standard & Poor's and the NASDAQ Composite to a new all-time record high. When we take a look at gold, we can see that this week has really been defined as a very narrow and defined trading range. That started off on Monday with the smallest trading range of the week, actually about $8. And that comes after Friday's dynamic move where it hit the highest trading point of the year and then sold off substantially to close, in essence, lower on the day, but a little bit higher on the week. This week we are posting, in terms of weekly moves in gold, a small decline in pricing. Now, what I am seeing, though, is a bias to the downside, and I'm basing that on simple technical indicators, and in this case, the use of a resistance trend line, which has simply been drawn from a series of lower highs. That being said, this market next week is going to move on fundamental statements and not on technical indicators. And therefore, what we will look to do is at the beginning of the week, we're going to lay out our strategy so that if, in fact, the Fed announces a rate cut, and if that rate cut is 0.5%, we will do one thing. If it's 0.25%, which I believe is largely already factored into the market, we would act a different way. And of course, if no rate cut is announced, we could expect gold prices to severely sell off. So we want to have a number of strategies that we're able to act upon relatively quickly once that announcement comes out. And of course, there will be a press conference, as there always is, following the conclusion of this month's FOMC meeting. With that in mind, my recommendation is to maintain our current neutral stance in gold and silver. Silver, which had really been lagging behind in terms of performance, especially when compared to palladium or even gold, certainly came into its own element over the last couple of weeks. Of course, we did close higher on the week, but it was last week that we had an incredibly dynamic move, opening just above $15 an ounce and closing well above $16 per ounce, with a high last week above $16.50 and a higher high this week and a higher close this week when compared to last week. That being said, we have an Elliott wave count, but we also have a basic fib retracement, and it is for a pretty long data set, which begins at these lows below 14 at $13.59 up into these highs at $21. And that's why I am looking at a weekly chart so we could see the beginning and end of that price area. But when we blow that up, you can see this dynamic move last week. We had a solid move this week, but what we do also have in terms of information is that there is some real and substantial resistance at the 0.618% retracement that comes at $16.50, because for the last 2 weeks, we have tracked above that price point, but those were intraday or intra-week highs in the case of this weekly chart that could not be sustained. And as you can see, we did convert our weekly into a daily chart because that really gives us an indication of how this week finished up. And we also have our 3 moving averages long term, which is our 50-day, our 200-day, and 100-day moving averages. And the first thing that becomes extremely apparent is that when we moved and broke out of the range a couple of weeks ago and broke above 1527, that is a 0.78% retracement, we definitely had a bunch of golden crosses occur with these moving averages of the short terms moving above the longer terms. The other thing that we can see is that over the last 3 days is when we hit that resistance this week, because we had the day that closed above that. This is Friday, Thursday, and this is Wednesday. So this is the highest closing price we've seen in silver this week. The following day it opened at the area of the close, but then it closed very much lower, and today stayed below that range. And that tells me that this is a defined area that silver needs to take out, and the current level, I believe, of major resistance. Now, that being said, should the market have the ability to break out next week and continue to move to the upside, I believe we could see a little softening here. But if it does firm and move higher, our next real target has got to be above $17 at $17.40. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.